Hello, I'm Steve Stafford. Thank you for joining me for this installment of All Business is Personal. In this video, I'm going to focus on financial planning, tax planning, and banking considerations for closely held businesses. In other words, we're going to talk about money. Let's face it, money isn't the only factor that determines success, but if money and finances are managed well, the company will have a much better chance of obtaining and maintaining success. First, let's get started by talking about cash flow management, which helps businesses maintain working capital, liquidity, and funds for growth and expansion. The importance of regular monitoring of cash flows can't be overstated, as it allows businesses to ensure that future cash flows can be projected accurately and that appropriate cash reserves can be maintained. Business owners should ask themselves the following questions. Are financial measures in place to avoid the commingling of company and personal assets? Are all payroll taxes paid on time? If not, this can expose the owners to personal liability. Have all federal, state, and local taxes and fees been paid on time? Is the existing accounting team capable of handling the company's finances? And speaking of accounting, does the company work closely with a certified public accountant? Has the company reviewed its annual financial statements with a CPA? Do the business owners consult with a CPA throughout the year, or at least do proactive tax planning before year end? Or does the CPA merely prepare the tax returns based on the information they receive? Is the company claiming appropriate deductions and available tax credits? Also, has anyone confirmed that the ownership reported on the tax returns or Schedule K-1s is consistent with the company's stock or ownership records? Are distributions being made properly, or are non-pro rata distributions being made that could put an S corporation at risk, or which are inconsistent with the partnership agreement or LLC operating agreement? For real estate investors, should a cost segregation study be done on any properties? Is the company's current entity structure still providing optimal tax treatment? Or would the owners benefit from a change in entity or ownership structure? Let's move on to personal financial planning. Do the owners work with a financial advisor to help them manage their personal finances, investments, and retirement savings? Are assets sufficiently diversified? Are the owners using tax advantage strategies, such as qualified retirement plans, to save and protect assets for retirement? Do the owners have or need life insurance? Let's move on to banking. Does the company have stable banking relationships? Is the company satisfying its loan covenants? Does the company have or need to establish a line of credit? Also, are any personal guarantees in place? If so, have circumstances changed to the extent that the owner can now negotiate the removal of the personal guarantee? And for real estate investors, will transferring a property into an LLC or limited partnership trigger an acceleration clause under an existing loan agreement? I hope that these are all just reminders and that you've already addressed each of the items that I've highlighted in this video. But if not, there is no better time than now to get your financial planning, tax planning, and banking in order. Thanks for watching. I hope you join me for our next installment, which will focus on employees and human capital.